YouTube, what's going on? This is TerrenceRe, and I got a stock market update for you. We're gonna talk about this little mini flash crash we got going on right now in the market, and I'm gonna go over maybe some alternatives to stop the bleeding, and maybe some things that we might be able to do in our portfolios right after the buffer. Oh, right after the buffer. All right, so here we go. Right now, I'm showing the S&P 500 futures. I actually got the micro futures pulled up. I did some scalping in here earlier today. It's down 131 handles. That's a large move. That's a 3% move in the S&P 500 futures. Um, if I go over to my positions, I open up close, you'll see right here. I scalped like 25 bucks. I got out. Just something quick. The market moving pretty fast, so I was like, yeah, get out. It was just something to do while it was inching around earlier today. So you can see right now I got let's see, I'm green on the day, and that's just because for the most part, for me, I stay bearish. I keep bearish deltas, so I keep bearish trades on. So when the market goes down, that's generally good. And I have long theta positions. As you look over here, everything is plus. You don't see a negative in the um, theta column over here. So that lets you know that as time goes by, my positions for the most part gain value, or the options are dwindling. So if I sold them, then I'm making money as the value dwindles. Kind of like you selling the used car, right? Or you selling the car, period. And then the other person is buying the car. You're making money as the depreciation comes in. So if you look in, I got a couple butterfly options on. I got a butterfly option on in Microsoft, KWEB, Tesla, and then I actually have a put spread in the bonds, which is not doing too well right now. It's just down a little bit. I had to roll it out today, so I'm gonna try to get all that in before the market closes. So first of all, I wanted to talk about, if you look in the title, I got Chinese alternatives. So this weekend, um, I had it pulled up. I think I closed it out. So is Benzinga posted some news on China. Let's see. Basically on Alibaba. Alibaba shares are surging today. So, and I'll just show you how I got this trade on KWeb. That's what I'm talking about. And it's just telling you why Baba shares are surging. And it just says that according to a South China Morning Post report citing two sources, briefed on the situation, the Chinese government is set to hold a symposium with the country's big tech companies. The scheduled meeting has increased optimism that restrictions on big tech firms could be eased and internet platforms could take a larger role in China. All right. So you guys probably know that I'm not real big on fundamentals or any news or anything, but that's how I got the trade. I was scanning, flipping through. First of all, I seen high option volume. So if I was to go to BABA, let's take a look at it. I'm gonna go to the trade tab. Now I'm on Tastyworks platform. The link is always in my description below. You want to open an account, use my affiliate link. I think I just get like some little points or something like that for it, but it's the best option platform out there to me, my opinion. Right. All right. So if we come and we come over to Baba and we look at, let's go 21 days out. This is the May monthlies. Look, if I go over here, if you click on any of these sections up at the top, you can put on what you want up here as a header, and I have volume for one of them. And if you look just today alone at the 95 strike on the call side, you got almost 7,000 contracts bought today, or 6.67. That's a lot. You got another 5,000 contracts at 105. You got another 3. These were bought today to go along with the thousands that were already open. So who's buying calls? And you could say, now just looking at this, it doesn't tell me whether they're selling the calls or buying the calls. I doubt very seriously that they sold calls at the 95 strike, being as that price is at 97, right? And even before that, it gapped up today. So whatever it opened at, they would have been selling at the money calls at the time when they placed these. So I doubt very seriously that you would do that. That seemed kind of crazy, unless they did something like a combo trade or something like that. Sold these calls, maybe bought these puts at the same time. But either way, from analyzing this, these are bearish. Bullish. Placing these trades, these are bullish. And also, I got something else to the scanner that I use in Thinkorswim that showed it to me on the Sizzle index, if you know how to use that. And so on the call option side, you can see that that traders were coming in and getting these calls. So based on that news, I came and looked at the chart on Alibaba, and you can see that it gapped up right here. And so it's been pulling back since it gapped up, but that's because it's overbought on the hourly. So anytime you have something overbought on the hourly or the 30 minutes, you can see right here, if I pull up the RSI, you can see where it was overbought. So that's going to be resolved. That's not a big deal, right? It's not a big deal on the intraday, because I expect for it to pull back some to resolve that. Now, once you pull back, now that's giving it more room to run to the upside, in my opinion. So instead, now one of the things that you can do for BABA, you say, I want to get long. This is a $97 stock. Let's just call it $100 for easy math. If you bought 100 shares, it's going to cost you, what, 10 grand to get long Alibaba. Now, do you want to get long and put 10 grand in a trade like that, depending on how large your account is? I'm going to show you a cheaper way to get long BABA, and then I'm going to show you what I did in KWEB. I don't know why I can't say BABA today. It's messing with my mouth. But anyway, so let's go back to the option tab. Now, if I was going to do this trade, I would, instead of doing 21 days, I would come 49. I would go to June monthly, give myself more time. I would stay in the monthlies. As you can see, these are thousands of contracts over here. What that tells me is that they're liquid, right? This is $100 stock, and we got tight bid-ask spreads. So that means that we're gonna get good fills. You know, you don't want you don't want to give away money trying to get into the trade. So if I were to buy this call right here in the money, right? This one is in the money. Buy this call, the 95 strike, sell the 100 strike. That's gonna, if I lock that in, I pay 237 for this trade. This trade is a bullish trade. I need it to go up. If it goes down, I lose money. But it's a $5 wide spread that I'm paying 237 for. What that means is the max profit is 263. You take the difference of the 5, you subtract the 237, what you're paying, and that means that you have the potential to make 263, right? Risk 237 to make 263. And it's going, and it actually is going down to 235 right now. So it's moved. You can see the price moving around on this spread. Now, with that being said, I would not try to hold it and make the full 263. If you get a pop and the market continues to go up, I would get out. I would try to make out, me personally, I would probably try to make, and you can see my butterfly spreads just bouncing around. I would try to make maybe $100, maybe one. So if I paid 240 for it, right? Let's lock that. I would try to make maybe 120, maybe 135. And you say, why is that? Because if you look over here on probability of profit, it's telling you you got a 44% chance of making this trade, of winning this trade. However, if you only try to make 50% of the value, or you got a 57% chance of winning this trade. What that means is, if you do this over a long period of time, and the market is getting killed right now. If you do this over a long period of time, you statistically you should make money, and you manage your losses, right? Because I would never hold this to lose the full 240. And that's how that's one of the ways doing an option trade, how you can do things cheaper, more cost effective. And if you say, man, I want to make, I'm only trying to make, I'm only making $100, and you want to make more money, you can do more contracts, right? So let's say you pay 240 to get into the trade, you're risking 240, and you say you're going to make you want to try to make 120, right? So you say you're gonna try to make 120, then do 5 contracts then. If you want to do a larger trade, you just do 5 of these that'll cost you what, $1,200. And if you're successful and hit the trade, you make about 120 per contract. That's what? That's $600, if my math is correct. So $600 on a nice trade. And this could stop some of the bleeding in your portfolio, right? Because it looks like everything else is down. You look at my watch list. All of these stocks right here are inside the S&P 500. Boeing's down, Caterpillar, Goldman Sachs, the banks are down, JP Morgan, Netflix, Tesla. Tesla was holding out. Tesla's down. Microsoft down. Google down. Amazon getting creamed. Apple, Facebook. So with everything, let's go back to the daily. With everything down on the day, the Chinese stocks are up. But I want to talk about KWEB before the market closed. So KWEB, the same thing. This is an ETF, China Internet ETF, right? So it looks just like the BABA chart. Let's take a look. Look at BABA. Now let's go look at KWEB. Similar, right? So that lets you know they're tracking. So if that's the case, then we can do something. Then we could do something like trying to. We could do something in the similar, because they're similar. So this is a cheaper trade. So instead of paying 95 to $100 on BABA, this one is $28. So you could jump in this with 100 shares if you feel comfortable to risk about $2,800, or or we could do what I did. Now, this is what I did. You take this trade, it's on you. I went out to 49 days. I wanted to give myself time to be right. And what I did was a butterfly. So instead of just doing a call spread, I did a butterfly. If you can come up here and you can click on this arrow, and you can iron condor stocks, ratio spreads, whatever you want to do on here, you can click on it. You can find butterfly. You can change it to the put side or the call side. I did the call side because I'm bullish. And you can hit go. And it's going to automatically model it for you. A butterfly is just where you sell to in the middle, and you want to try to pin it to where you think it's going to go. So you can see these two that I sold right here. So this is from this 27.42 to 32.42 is $5 wide. Now, if I would have went $5 wide here, that's an equidistant butterfly, but that's not what I did. I broke the wings. When you break the wings, you bring that means that it's not equidistant. So basically, I have a 5 is $5 wide here and only $3 wide here. What does that do? Instead of me having to peg this, which I still would make more money if I pegged it, if it goes through here, see, look here. If I put it back, just look at the green right here on the traders tab. That's what makes Tastyworks so effective. It's showing you where you make money and where you lose money. You lose here, you lose here. But if it stays in here, it's green, you make money. But watch what happens when I break the wing, bring it in. Now anything up here, I make money. So if it overshoots my target, then I can still make money. And slightly, it costs me more money to do this trade. But if it shoots and just blows up, the news is too good, I still will make money. So I did this trade, and it only cost me what is it, 141 to do this trade with a max profit of 359. So, and I'll look to capture anywhere between maybe 70 to $100 on it, maybe even a 1-to-1 on that particular trade, because I can hold that trade will increase in value as time goes by. So we talked about butterflies, broken wing butterflies, and call spreads, that you guys can do. And that call spread that I did in BABA, you can do it on the put side if you're bearish as well. So instead of getting smoked in the market and just holding stock, there are trades that you can do that are more cost effective than holding and just holding and praying. I actually have a put butterfly on in Microsoft. I think Microsoft might get a little pop after the day, but who knows? And you can see right now, I'm in the money on it. So I wanted to keep going though. And you can see I'm up on it right now, about $47. I was down. I'm up on the day $97 on this Microsoft trade because it was down earlier. So I could pull $41 out of it, but I want more than that. I paid $2.99 for it. So I'm gonna hold this Microsoft trade until I got butterflies on in Tesla. So I'm 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 leveraged to the downside. So I want the smoke. I just put on a bullish position in the Chinese stock because I seen it and I said, ain't nothing wrong with putting some bullish trades on. I'll make them. I'm not a bear in everything, but um, these are some of the things that you guys can do to make a little money. I hope you got something out of this video. Hit the like button, hit the subscribe button, and share the video. I do trades. I show you the trades that I do, and I pull the trigger. So I ain't on here just talking and just showing you charts and stuff. A lot of the stuff that I'm showing, that I talk about, I actually do. The account is up so far this year, and there's the bell, and it's sold off going into the close. I don't know if I've seen anything on a regular day. Now during the COVID, when the coronavirus first came out, I think we had limit down days, but we know why. This day is just down, and we don't even have we don't even have no catalyst like that, right? So this to me, this is worse. Even though it's not moving down like as fast, this is steadily going down. Like you get a little rally and then the rallies don't hold up. These are signs of a bear market. So I would advise active traders, day traders, Robinhood traders, Wall Street bet traders, whatever you want to call yourself, apes. You got to learn how to trade going to the downside. You need to learn how to sell premium. Learn, be long vol or short vol. You're gonna have to play volatility and have some long theta, have some short deltas. And if you don't understand what those things mean, comment in the section and I can do videos talking about short deltas, long deltas, being, you want to have positive theta and things like that, so that as time goes by, you're not losing money to hold positions. So with that, guys, I done talked myself out. I was trying to get everything in before the bell closed. I will be doing another video this weekend. And the video I do this weekend, I'm probably going to do it on either TradingView or Thinkorswim, because it's just going to be pure charts. And I'm just going to be going through charts, charting it up, talking about, potential bullish trades and bearish trades that I see in the market. And I'm gonna start doing like a weekly Saturday video with that. And so with that, guys, I'm out. Peace.